biggest difference is in 2008, USD was too big to fail. In 2023, it's not. And if it does go down, we don't want China to be that reserve currency. We do want it to be Bitcoin a freedom currency. And I think that actually the moves that I'm describing, that is like the positive vision of the future. If this system is going to go down, let's have an orderly exit. If you think that the Fed isn't simply piloting in the wrong direction, but actually crashing the plane, how do you make your way to the parachute? And I think that parachute, that exit, is BTC.
If you believe the United States dollar is losing faith and dominance, it would not be a bad time to hold a percentage of your wealth in BTC. Bitcoin is digital gold. If you think Bitcoin is some Ponzi scheme or scam, you should be doing more research on it right now. Crypto family, welcome back to the channel. Aaron here, coming back at you with another video. If you're new, please subscribe. We have new cryptocurrency videos coming out every single day. But in today's clip, we'll be checking out Balaji and Cathie Wood. They got together and they talked about what was going on in the market right now. They talked about what the Fed is doing, how it's unsustainable, the rising and lowering of interest rates, and they kind of compare that with how Bitcoin can help fix that problem with the Fed. They also talk about inflation, how it's completely different than what the Fed was trying to fight back in the 70s versus now, how we've overreacted to inflation. And one of the most interesting things that we'll be listening to in today's clip towards the end is how states in the US will start to accumulate a digital gold position along with other small countries in Bitcoin. This is actually very interesting, something I hadn't thought of myself. So I recommend you guys check out the entire video. A lot of great information shared by Cathie and Balaji. Let's go ahead and check it out here.
When I last year was pointing out, hey, Fed, what are you doing? I got let's just put it this way. A lot of people just basically said, look, you're blaming your performance on the Fed. We got that kind of pushback. I wasn't talking about my performance. I was talking about economic policy and some red flags that the Fed was ignoring and still is ignoring, which is quite worrisome.
Yes. So here's the thing, is what I've sort of realized is you have to be completely outside the system and have a totally different theory of what should be. Like, I'm not of the opinion of the Fed should have had high rates, the Fed should have had low rates, and so on. Basically, if you look at this curve, right, this chaotic curve of up, down, is this really the solution to some equation, R star? Or is this some committee voting and doing political things and, generally stimulating the economy since, the mid 80s and printing money and just kind of going voo, 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 like a pilot moving a joystick up and down because they're like up, down, they're like steering a car by mail. Okay. Imagine you're steering a car, you drop a postcard out the window and you wait a week before you get it back for your turn, right? That's, of course, you're going to crash, right? And that's a Fed with this kind of, group of committee members that is like, smells the incense and they decide to set the interest rate and we have a new interest rate and the entire economy gyrates to this, where it's based on like rearward looking things that they're seeing, right? And you compare this incredible unpredictability, this cyclicity, this craziness, where it's like this bipolar thing where it's down and then up and then down and then up and down and up, right? To Bitcoin, which is completely predictable in terms of issuance schedule. It is a fixed policy where we can plan against it for, years. And it is being fixed for, it's proven itself. It wasn't, 10 years ago, but it is now. It's certainly much more predictable than the Fed has been over this time frame, right? So this is a root and branch. What I'm trying to get at is root and branch critique, which is, do I think the Fed is responsible for the economy? Yes. Do I think that they are arsonist and firefighter, as the saying goes? Absolutely. Do I think that it's crazy that some immigrant engineer at, who has an account at SVB is supposed to be responsible for ensuring the bank's actually solvent, but Jerome Powell is responsible for nothing? Absolutely. But do I think it is one person and just firing one person or tongue lashing them is the issue? No, I think it's a systemic problem. The systemic problem is the difference between this and this. And, what's going to happen is we're going to actually have, in a sense, the true election. At the end of the Soviet Union, they had glasnost and perestroika. You're familiar with that? Right? Like glasnost was like free speech and perestroika. Okay, great, right? So you're familiar, basically glasnost was more free speech, and perestroika was more free markets. And these things basically destabilized the Soviet Union because it wasn't built on free speech and free markets. And eventually, towards the end, they actually had the first true elections where you could vote against the central planners, you could vote against the communists, and then people voted against it, right? And I actually think something very similar is happening where social media is American glasnost. Under Elon, it's like actually free speech. And cryptocurrency is American perestroika, and Bitcoin is actually free markets. And now we're having the true election, which is between USD and BTC, where people are again voting against central planning of a very different kind. And that's actually the macro frame that I have on this, is that the level of instability the Fed has been causing, they're now in the state of like a plane going like this. Can I predict every single crazy gyration they're going to make? I cannot. And ultimately, predicting a lot of the macroeconomy is on that. Can I know that there's going to be passengers who are hitting the eject button and like this pilot doesn't know what they're doing? We're getting into the parachute, the Bitcoin parachute. We're getting out of the plane. Yes, I think there will be more.
All right. I started in the business in 1977. I was in college. And so I experienced the last bit of that inflation into the double digits.
Woo.
I know.
Yep.
And
well, this inflation is not shown here, but I mean the rate hike.
Yeah, inflation was in the double digits, and rate hikes went into the. And there was even a surtax that they put on at one point, so we were over 20% at one point. And then Volcker came in and focused on money. And I remember standing. This is how long ago this was, at the teletype every Thursday at 4:15 or 4:30, whenever the number came out. We were waiting for the money supply number. And if it wasn't low enough, the market sold off and so forth. Anyway, monetarism worked to get inflation down, getting that money supply down and having that as the sole focus. God bless him. Volcker took interest rates in 1 year from 10 to 20%. And that was the beginning of the end of that nearly hyperinflationary period. Now, to contrast with what Powell is doing today, so Volcker took interest rates up twofold. Powell has taken interest rates up 20-fold. 20-fold.
Right.
And
it's a difference between going from here to here versus going from near zero up over here. And it was also something where like the economy was more, I shouldn't say normal, but it was like the state of, it's like altitude, right? If your altitude is here, you can take a certain set of maneuvers. If your altitude is close to the ground, you cannot take the same set of maneuvers, right? Like the state of.
Exactly. So, and at the same time let's see, we got to 1981 and he still had the screws on and, was singularly focused. We got to an inverted yield curve of more than 1% or 100 basis points. And for those who don't know what an inverted yield curve it is when long-term interest rates drop below short-term interest rates. And it's when and that's where we are now. The bond market is worrying about something, and it's typically recession. Now, many people say, oh, yeah, last time, 1981, back to the difference here. 1% on a 15% interest rate. Well, the long-term treasury yield back then was 15%. This is the Fed funds rate. So 1% on a 15% treasury bond yield, you can measure that 1 divided by 15. Is roughly 6.5%. 1 over 5%, which is where we are right now, is 25%. And I finally figured out when I was in LA this last week, right near the place I worked at 333 South Hope Street in Los Angeles. I was on the 50th floor of that building when we had an earthquake. And I was in another earthquake, the Northridge one, when it was a 6.5. These are wicked numbers, just awful. 6.5 on the Richter scale is a very bad feeling. 25, I don't think has ever happened.
I never would have thought, 30 years ago, 20 years, even 10 years ago, that Indian founders would think of Indian banks as being more trustworthy than American banks. That is a massive world model update. Massive world model update that people are wiring money back home. They're wiring money outside the American banking system because they don't feel like they can go and diligence everything 10Q by 10Q to find the where's Waldo of are they actually insolvent or not? Will my money be there, right? This is the same reason that people are moving money to big banks and money market funds and so on. So I think we're agreed that basically in the flight to safety, people will choose Bitcoin, whether you call that contraction and people feeling the flight to safety, whether you think of it as inflation in the sense of the Bitcoin price going up, that is the one number that they can't fake in the system. They can hike rates while printing trillions, but they can't change the amount of Bitcoin. And that hard denominator constrains them, and it's visible to the whole system. Plus, it's a global asset. Plus, it's hard to seize. Now, one last thing I want to talk about, like from a hope standpoint, okay? You mentioned that Florida might do state-chartered banks banking crypto, right?
It's a rumor. There are a number of states, the Dakotas and Florida among them, the states that are trying to attract capital and labor.
Absolutely. That's right. So all these regional banks are getting killed and so on. And in a sense, there's a real deviation of interest between state and local versus the feds, right? And so what I think could happen is bitcoin.florida.gov, bitcoin.texas.gov, bitcoin.mississippi.gov, and bitcoin.montana.gov. All of these states, which, Texas GOP has passed something where it has in its platform the right to buy, sell, send, and receive Bitcoin shall not be infringed. The mayor of Miami takes a salary in Bitcoin. Mississippi and Montana have Bitcoin mining protection bills. Wyoming and Tennessee have DAO bills, right? So lots of these red and purple states. Colorado accepts taxes in cryptocurrency. New Hampshire is pro-cryptocurrency, right? Lots of these, let's say, red and purplish kind of states or pro-freedom states are pro-cryptocurrency. And if they reopen the gold window, okay, if you had bitcoin.florida.gov, bitcoin.texas.gov, where it's like basically a very simple exchange. It's like Coinbase circa 2013. You can buy, sell, send, and receive Bitcoin. You can place limit orders. You've got a fiat USD BTC order book. That's it. And it's set up for you to just take your Bitcoin off the exchange within, a few days, or right away, ideally. It's not meant to be something where you hold it there. They just keep pinging you to take it off, right? And then what happens is the state just takes a cut of that. So they're now accumulating a digital gold position, okay? Why is this important? Why do I think of this as a positive development? Well, first is, DeSantis and others have come out against the CBDC, but what are they for? They're anti-CBDC, which is digital serfdom. They're for Bitcoin, which is digital freedom, okay? And so now you can be for something rather than simply against, and you have essentially a Bitcoin-backed local state government, right? Where this is the move against the feds. And then the question is, okay, will the feds, will the Fed try, or the little Fed, try to shut down FedWire and ACH and other access to these banks? Will they cut off Florida? Will they cut off Texas? I think that's probably a bridge too far. If they did do it, it would show the potential financial totalitarianism incipient in a CBDC. If they didn't do it, well, the fiat rails would be open. And the reason I think something like this is going to happen is it's the next logical step after, for example, El Salvador adopting Bitcoin, mayors adopting Bitcoin, because right now you have the government going and fighting Coinbase and Binance, and that's government versus company. A company doesn't necessarily have enough hit points to fight a government, but another government does. You see in Pacific Rim, to fight giant monsters, you needed giant robots, right? So if you have a state like Florida and Texas with a lot of hit points that is now, that can't go easily bust, that's got a lot of credibility and reputation. And if you have a lot of red and purple states that share their order books, their USD BTC order books, that is now something which keeps the USD BTC window open, allows exit from the system, benefits local states because they can accumulate digital gold, builds upon the existing shall not be infringed, DAO language, minor language, mayors accepting Bitcoin, El Salvador as a sovereign currency, and finally can be internationalized because Nayib Bukele held a meeting of, I think, like 44 small countries, bankers, and have been planting seeds about, what it's like to transition your country over to a partial Bitcoin standard. So you also have this happening globally where small countries like, Palau, for example, that are pro-crypto could do this, okay? If that happens, if the digital gold window is reopened after Nixon closed the gold window in 1971, at the same time, by the way, that China is a totally different animal and they're moving oil and other transfers over to the petro yuan, the biggest difference is in 2008, USD was too big to fail. In 2023, it's not. And if it does go down, we don't want China to be that reserve currency. We do want it to be Bitcoin a freedom currency. And I think that actually the moves that I'm describing, that is like the positive vision of the future. If this system is going to go down, let's have an orderly exit. If you think that the Fed isn't simply piloting in the wrong direction, but actually crashing the plane, how do you make your way to the parachute? And I think that parachute, that exit, is BTC.